Inflation is something almost everyone in the United States has felt at some point. Prices of groceries, gas, and housing seem to rise faster than paychecks, and your cash starts to lose its purchasing power. But have you ever wondered how the wealthiest Americans, think Warren Buffett, Jeff Bezos, or everyday millionaires, protect their money when inflation hits hard? It's not magic, it's strategy. While most people leave their savings sitting in a bank account, rich individuals diversify their wealth across multiple assets designed to hold or grow value, even during tough economic times. For instance, during the 1970s inflation crisis in the US, gold prices skyrocketed while the dollar's value declined. Rich investors who held gold or invested in real estate not only survived inflation, they thrived. And this isn't limited to history. Even today, Americans who plan ahead are looking beyond cash. They turn to stocks, bonds, real estate, and even emerging digital assets like cryptocurrencies to preserve wealth. The key is understanding that cash alone rarely protects you from inflation over the long term. Wealthy Americans also pay close attention to macroeconomic trends and government policies. They watch Federal Reserve interest rate decisions, fiscal stimulus packages, and market volatility. Many of them diversify internationally, investing in foreign stocks or real estate outside the US to reduce risk. By combining multiple financial strategies, they can maintain purchasing power, hedge against uncertainty, and keep their wealth growing, even when the US dollar faces pressure. So how exactly do rich Americans protect their money? First, they invest in precious metals, particularly gold and silver. Historically, gold has maintained its value during periods of inflation, currency devaluation, or economic uncertainty. During the 2008 financial crisis and the recent COVID-19 pandemic, gold acted as a safe haven for many investors, including high-net-worth Americans. Next, they focus on real estate. Residential and commercial properties not only appreciate over time, but also generate rental income, which is crucial during inflationary periods. Real estate acts as both a long-term growth asset and a source of cash flow, keeping wealth secure. Equities are another key tool, but with a strategic twist. Wealthy investors target sectors that perform well during inflation, such as energy, consumer staples, and healthcare. These industries tend to hold up even when prices rise, providing both stability and growth potential. More recently, some Americans are exploring cryptocurrencies like Bitcoin as an alternative store of value. While volatile, small allocations of crypto can act as a hedge against a declining dollar. Debt management also plays a role. Smart investors keep low-interest debt, leverage strategically, and refinance when necessary, ensuring inflation doesn't erode their financial flexibility. So what can ordinary Americans learn from these strategies? First, don't rely on cash alone. Inflation slowly reduces its purchasing power, and leaving all your money in a savings account may cost you in the long run. Diversification is key. Consider allocating some funds into gold, real estate, or equities, always based on research or professional guidance. Second, focus on inflation-resistant investments. Look at sectors like healthcare, energy, or consumer staples that historically weather economic shifts. Real estate, whether residential, commercial, or even REITs, can provide both growth and income. For those comfortable with risk, a small allocation of digital assets could offer additional protection. Finally, stay informed. Follow Federal Reserve policies, watch economic indicators like inflation rates, and keep an eye on market trends. The wealthiest Americans aren't guessing. They plan, adjust, and adapt. And while not everyone can be a billionaire, adopting these principles can help protect your wealth and give you financial security in uncertain times.